Good morning and Happy New Year, everyone. 2011 was an excellent year in the markets, and I'm extremely excited to see the remarkable progress that my students made over the past year. Several of my students even outperformed me in the market last year, which I think is wonderful because to me, as a coach, mentor, and teacher, there's no greater joy than to have the ones I've trained and care so much about do so well. Looking forward to 2012, I've got some exciting things planned. This month I've got a 4-part DVD series that I produced with SMB Training coming out. The program thoroughly explains the process of how to trade the bearish butterfly in virtually any market condition and in any time frame. And the program's set up so that once you've got the concepts down in the DVDs, there's going to be a supplemental mentoring program available that'll walk you through how to adapt the trade to specific market conditions to improve your returns even more. In addition, I've made a lot of improvements to the program over the last year, and I've got lots of ideas on further improvements, such as mini training programs and group webinars, which I'm sure you're going to find very entertaining and informative. So make sure to join our mailing list if you haven't done so, and keep an eye on the blog. And last, I'd love to remind you that the new year is a great time for planning, so I'd like you to go ahead and get going on creating and reviewing and revising your goals. And of course, if you need any help with that at all, give me a call because that's why I'm here. One of the things I'm going to add this year is a market update, which I'm going to update every time we see a major change in conditions in the marketplace. So here's a chart of the Russell 2000, and what I'm going to do in these market updates is just walk you through my thinking on where the market might go, and we can talk about how we can use the information that we gather to adapt our trades. So in general, this month, Russell has been in a very bullish chart pattern. We have an inverse head and shoulders going on here. It looks like if this gap holds that we're going to gap out of this range today. If we do gap out and the move holds, I would expect a fairly rapid movement up here into the 775, 780 range. From there, I'd expect the market to roll back down probably to the 750 range, and depending on how the other indices are reacting, probably a breakout closer to the 790 area. Whenever I take a look at the Russell, I want to take a look at what it's doing compared to the other indexes. So let's take a look at the SPX. When you look at the SPX, it's almost in an identical situation to the Russell. We've been kind of trapped by this 1270 level for the last month or two. It looks like we could gap out over this today. If it gaps and holds, I would expect this index to run up to the 1290 area, which is pretty much confirming what I saw in the Russell. Probably roll back over to the 1270 and then bounce higher. If we take a look at the NDX, we have the same head and shoulders pattern, except it's a little weaker. We got a definite downtrending resistance area. I would expect we gap out of this triangle today. Should this move hold, I'd expect a move probably 2350 area, roll back down, test the 2300 area before we continue up, and we'll see where we go from there. And the Dow, same thing, gap out into the 12.4, 12.5 area, probably roll back down to the 12.3 and continue up, and possibly see new highs in the Dow, post crash for 2008 highs. Okay, let's take a quick look at the trades we have open. We come to the Analyze tab. Here is the January Method 3 butterfly position. This position, Friday close, showed up $900. We're getting a little extra profit in here from the profit on the gap anticipated in the IWM. It automatically comes into the charts on before the open on the next trade day. So with the gap up of 15 to 20 points that we're expecting, and taking away what the IWM has increased, we're probably looking around $700 profit and loss this morning when the market opens. I'd like to get 750 after commissions. These profits do not include commissions. So that means I need about $900 before I start to close this thing. Probably not going to happen today unless we get a gap failure or they don't destroy the value in these 690 butterfly, which I'm assuming they're going to do when the market opens. Okay, coming to the, let's take a look at our February trades. The 55-day February trade, if we get our anticipated gap, should be right around break even. There's really not a problem. We do have an add point at 760, so this afternoon, if the market holds up over 760, there's a good chance we'll be adding in a 740 butterfly here. Going to our February M3 trade. Let's just quickly switch this over to IWM for a minute to get the chart in the right way. This is what the February M3 trade looks like. Again, we're going to have some pumped up profits because of the gap in the markets and the profits showing on the IWM. This comes to 760. It'll probably be around break even. Delta and other numbers will be good. There's really not a concern there. So I don't anticipate doing anything with this today unless it's a really crazy day and we start pushing up over 770, then I'll take a look at doing something. And that is it for the positions. And basic market update where I think the market's going. Again, Happy New Year, and I will update you with any changes. Thank you.